Hello, traders. Gary Wagner here, approximately 2 o'clock in Honolulu, 7 o'clock in New York on Monday, 15th day of November, 2021, and this is the daily report for gold and silver. We had a slight decline in gold pricing today, primarily due to dollar strength, and dollar strength was a result of higher yields in U.S. debt instruments. We'll look at our current trades as well as current pricing for gold and what we think the best scenario could be to play out in the upcoming day. But first, to the price board. After 7 consecutive days in which gold has moved higher, today we see a slight decline in the precious yellow metal, with gold futures basis the most active December contract, closing down by $3.80 at $1864.70. Trader silver did decline to the tune of 0.85%, and now trading overseas is at $21.13. GLD, which is another trade that we have on, the Spider Gold Trust, closed down by 0.15% at 174.18. And the dollar index, which is responsible for much of the decline in gold, gained about 0.4% and is currently at 95.49. This first chart that we are looking at is a weekly chart of the dollar index. I do have a rather long Fibonacci retracement data set, which begins at the beginning of 2017, when the dollar index was at 103, down to the bottoms that occurred in April and May of 2018, when the dollar index was trading at a low of about 88. It hit a high that was equal to the high witnessed at the beginning of 2017 in July of 2020 at 103. Right now, we currently see potential technical resistance for the dollar, and it has been strong, but at the 50% retracement, which comes in at 95.84. The other primary reason that we've seen dollar strength is recent upticks in Treasury yields. Gold is currently trading overseas, currently fixed at $1865.50. You can see that as a small green candle. That means it just has begun trading in Australia. My sense is that I believe that the most bullish scenario that we could witness is a consolidation at this current price level, because we have seen gold rise approximately $100 over the last 8 trading days. So for it to trade sideways or have a nominal decline is an extremely, extremely bullish market sentiment as far as I'm concerned. And the best way to look at strength of gold in terms of the strength of trend is through the Japanese average chart or Henkin-Ashi, and I've just pulled that up. And you can see that even with today's decline, and that is this candle right here, because this small candle represents the open in Australia, we can see that we have still gotten consistently large-bodied candles with the absence of lower wicks on each occasion as this market moves up. It is not a surprise to me to see the market go sideways or consolidate. What we do not want is a major event that causes a real retracement in the market. But that being said, I remain extremely bullish on the precious yellow metal gold. We are looking at a daily Henkin-Ashi chart of Forex or spot gold. That is currently fixed at $1,863.24. It is actively trading now. It also shows the defined strength in terms of the Henkin-Ashi chart. Once again, we are seeing a disconnect between the moves in gold and the moves in silver, although not as pronounced as we were seeing when we would have one precious metal move to the upside and the other move lower on the day. If we simply take a look at this daily chart, we can see that although silver has absolutely been in a defined uptrend, when we look at these candles, we can see 2 occasions here and trading today in which the market closed lower. The other thing is that when we convert our chart into a Henkin-Ashi, what we will see is something interesting, and that is that the Henkin-Ashi absolutely has solid green candles. However, notice the lower wicks that occurred on those down days, meaning today, here, and here. So while I remain bullish on silver, it's a more cautious bullish tone than on gold. Lastly, I do want to look at GLD, the Spider Gold Trust. We went long, of course, at 168. It did retrace slightly, down about 0.15%, 174.18. But as you can see on a daily Henkinashi, we still have a trend that appears fully intact. We did get a smaller green candle today, but that is because it was a down day and it compares the open to the midpoint. The best way, I believe, to look at a Henkinashi in GLD or a candlestick chart in GLD is a weekly chart. It actually appears as though the strength is really building in terms of the upside bullish trend. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.